Blake Boss here, folks. Today we're going to be talking 3D printing. We have shares of 3D Systems now down around 17% over the last 5 days. That sell-off really started when the overall market sold off, but it picked up a lot of pace when famous research firm Citron issued a bearish report over 3D Systems titled "Everything 3D Systems Does Not Want You to Know About Their Business." I thought this was a great read, especially if you're a bullish 3D printing investor. You always want to look at the opposing viewpoint to make sure you're not being overly biased. You don't want to avoid the negative topics. So we're going to break these down. I have 7 key takeaways from the report. Number 1, they said consumer products suck as evidenced by reviews. Sorry to use that word. It was used in the report. Number 2, they said Phoenix System is a very small and negligible part of 3D Systems' overall business. The company had around $6.29 million in sales when they bought it. That equates to 2% of 3D Systems' 2012 revenues. Number 3, they said acquisitions can't maintain pace, and recent acquisitions have been uninspired at the company. Then number 4, they said organic growth rates are misleading at the company. That's hard to substantiate this claim, in my opinion, but I think investors going forward, you can just look at overall revenue growth rates. The newest acquisitions have been relatively small and shouldn't influence revenue growth rates by a large amount like the past acquisitions did. Number 5, we have poor employment reviews working for the company, so that was a troubling thing to look at. Number 6, it's interesting how much they like Stratasys compared to 3D Systems, and that was evidenced by the market share of Stratasys. They're saying that they're an industry leader with a 53.4% control of the industrial 3D printing market. And last but not least, number 7, to kind of wrap it up for you folks, basically the report highlighted how 3D Systems is trying to do too many things and isn't particularly great at any one of them, and comes with a premium valuation compared to its peer Stratasys, who they feel is a much better pick. They think this premium is unsubstantiated and will correct in the future, which is why they are bearish on 3D Systems stock price going forward. The takeaway for me, folks, I thought the report was a good read and had some valid points around the Phoenix System acquisition, the old consumer products not reviewing well, and valuation concerns. I don't like how they left out 3D Systems' new line of cube printers as pictured here. I agree that the old cubes were uninspiring, but the new printer line looks like it has a lot of potential. These printers are far better on just looking at the spec sheets from the old one. I personally think the stock is overvalued, and the R&D budget being spread pretty thin across a lot of different technologies makes me worry they won't be able to compete very well in a lot of the different verticals they're competing in. And basically what I'm saying there, folks, is 3D Systems has a bunch of different technologies, from multi-jet printing to material extrusion to laser sintering to stereolithography, and they have to spread that R&D budget around all those technologies, while a company like Stratasys has 2 to 3 technologies, so their R&D budget is more focused on select technologies. So basically for me, if I had to invest in a 3D printing stock today, I'd probably look at Stratasys or Arcam, because I like how focused their business models are. They're not fueled by acquisitions. I like that strategy more so. But if you'd like some other lower price stock picks, you can email us at retirerich@fool.com. We'll send you 3 great stock picks all for free to help you save for retirement. Thanks for watching, and Fool on.